Howdy, y'all. Welcome to the Liberty Call. Today is Wednesday, February 15th, 2023. Hope everybody's having a fantastical day out there in the interwebs. It's my birthday. I'm 49 years old. Can you believe it? I don't look a day over 38. So anyways, hope everyone's having a fantastic day. Like I said, Mother Nature, here, let me bring this up on the screen, brought me a gift. Look at all this lovely snow. There's a car under here. Here's my truck. So it's actually not too deep. It's probably only about 6 to 9 inches deep, but we got a pretty good amount of snow here, and which, I don't mind, but some people that I know are not big fans. But anyways, looks like the markets actually are going to finish all in the green for today for the most part. Was in the red most of the morning and early afternoon, but managed to squeak out and get above the midpoint for the day, and which I guess is a positive sign. But I think a lot of folks out there in the trading world are probably just not real sure where things are headed for the foreseeable future. My personal guess, if I were to put money on it, I'd say we probably have another 6 months of ugliness before we bottom out. How ugly it's going to get before we do bottom out, that's tough to say. I don't have a crystal ball. I only can make some assumptions based upon, past downturns or market events, and make an educated guess. That's really all you can really do in this type of business. But anyways, all right. If it's your first time watching Liberty Call, please give me some thumbs up for my birthday. Likes, shares, subscribes, follows, all that good stuff. I would greatly appreciate it. And let's go ahead and jump in and take a look and see how the markets did. Dow Jones was up 0.11%, closed at 34,128. S&P 500 was up 0.28, closed at 4147. NASDAQ up 0.92, closed at 12,070. Small caps are up 0.66. The VIX fell 3.44%. It's currently at 1826. Canada was up 0.08. Brazil up 1.59. Mexico up 1.43. Over in Europe, Germany was up 0.82. UK up 0.55. France up 1.21. The Euro Stoxx was up 0.97, Netherlands up 0.89, Spain up 0.34, Italy up 0.13, Switzerland up 0.36, and Portugal up 1.18. Russian exchanges both in the red today. The MOEX down 2.95, RTSI down 3.98. And the overnights in Asia, mostly, if not all red. Japan was down 0.37, Australia down 1.06. The Shanghai in China was down 0.39. The SCSE component down 0.25%. China A50 down 0.77. DJ Shanghai down 0.49. Hang Seng down 1.43. And the Taiwan weighted down 1.42%. All right. So looks like other than the overnights in Asia, the rest of the day looked pretty good. Very strong in the European markets. So we'll take that as a win. So all right, well, let's go ahead and jump on over to the market recap for today. S&P 500 cuts losses as easing Treasury yields lift tech. All right, get my notes up here. Let's see here. The S&P 500 pared most of its losses, buoyed by tech stocks, after Treasury yields retreated despite a stronger than expected retail sales report that raised concerns of more Federal Reserve rate hikes. Retail sales rose by 3% last month, beating economists' forecasts of a 1.8% increase. The report, led by pent-up demand for autos, highlighted a strong consumer, which makes up about 2/3 of economic growth. The Retail Sales Control Group, which is a factor into U.S. GDP, rose 1.7%, exceeding forecasts for a 0.8% rise. Investors' concerns about more aggressive rate hikes were eased as Treasury yields retreated, boosting growth sectors of the market. Tech giants Apple and Alphabet were the top gainers, while semiconductor investors weighed a decline in Taiwan semiconductor manufacturing and a surge in analog devices. Berkshire Hathaway cut its stake in Taiwan Semi by 86%, sending the latter's share price down over 5%. Analog devices jumped 6% to a 52-week high after reporting better than expected quarterly results on both the top and bottom lines. Roblox also surged 25% after reporting better than expected fourth quarter results, driven by a jump in bookings. The video game company reported healthy daily active user growth across all regions and solid bookings and revenue trends. Airbnb delivered upbeat guidance after quarterly results beat estimates on both the top and bottom lines as a healthy demand for travel underpinned bookings. However, the energy sector was a drag on the broader market, falling nearly 3%, driven by a slump in Devon Energy. The slump in oil prices followed a much larger than expected build in U.S. weekly crude stockpiles, which rose by 16.3 million barrels last week to 471.4 million barrels, well above expectations of 1.2 million barrels. Devon Energy fell 11% after its fourth quarter results missed expectations, and the energy company projected capital expenditure of $3.6 billion to $3.8 billion, above estimates for $3.42 billion. Overall, the S&P 500 showed resilience despite a strong retail sales report and concerns about more aggressive rate hikes. The retreat in Treasury yields and the strength of the tech sector helped support the market, while the energy sector suffered due to a slump in oil prices and disappointing earnings. All right, so that's everything there. Next article up has to do with retail sales. U.S. retail sales roared back. Manufacturing shows improvement. All righty. Retail sales in the U.S. rose by the most in almost 2 years in January after 2 straight monthly declines, boosted by increased purchases of motor vehicles and other goods, according to figures from the U.S. Commerce Department. The 3% increase, which was ahead of the Reuters forecast of a rise of 1.8%, has prompted some economists to raise their first quarter economic growth forecast and to suggest there is no immediate prospect of recession. What do we say? These people they can cheerlead all they want, but they're not going to, stop this market cycle from happening. But I mean, they can hope. They can hold those doors closed and try to keep, the barbarians at the gate out for longer. But I just don't see it happening. However, others have expressed concerns that the Federal Reserve could increase borrowing costs higher than is currently expected, creating a risk of an economic downturn. Yeah, I mean, my personal belief is that the Fed is probably going to have to take rates above the inflation rate that we're currently experiencing. So that's why my personal guess is somewhere in the 6% range, not the 5.25% that a lot of these talking heads have been talking about for the better part of a year. So, all righty. And last up has to do with the debt ceiling. CBO finds government could be at risk of default between July and September. Boy, that'd be terrible if the federal government went out of business. I would probably cry. Parasites who live off the government. The Congressional Budget Office report released on Wednesday warned that the U.S. government's inability to pay off its debt obligations would fully occur between July and September of this year. The estimated exhaustion date, also known as the X date, is still uncertain. However, as it depends on how much how much in income tax receipts are collected in April, the CBO report was published in response to congressional interests, stating that the government will have to, quote, delay making payments for some activities, default on its debt obligations, or both, end quote, if no action is taken. The U.S. Treasury Department began extraordinary measures on January 19th to delay government's inability to pay its bills following the formal hit of the debt limit. These measures are running out, and if a default or even threat of one occurs, it could have market-rattling effects and send the economy into recession. The White House, Treasury Department, and lawmakers are reviewing the CBO's reports as they grapple with resolving the debt ceiling issue. The CBO's second report, the, quote, budget and economic outlook of 2023 to 2033, end quote, projected a federal budget deficit of $1.4 trillion for this year, with a shortfall increasing to $2.7 trillion in 2033. Do you think they're only going to be over by $2.7 trillion in 10 years? Barring no changes or a collapse of the federal government, I could sell you a bridge in Arizona. Treasury Secretary Janet Yellen, one of the biggest idiots in the world, warned in January of irreparable harm, and that's in quotes, if lawmakers do not address the issue in a timely manner. However, Yellen believed it was unlikely that cash and extraordinary measures would be exhausted before early June. The U.S. has previously flirted with a debt default, and it could have a global economic impact since the U.S. dollar is the world's reserve currency. Well, here's a solution. Maybe stop spending so much money that you haven't made. That would probably be my solution. That's kind of like what I tell clients. Don't spend more than you make, and you're probably going to be in a good spot later on in life. And if you can save a quarter of what you make, you're really going to be in a good spot later on in life. But, most people would rather try to keep up with the Joneses and all the other idiots in their world. And, it's the same thing with our government. No one wants to be the bearer of bad news or have a low time preference. Everyone has a high time preference. They want everything right now as opposed to postponing gratification into the future. So, well, that's just the way it is. And unfortunately, those of us who prepare are going to be in a good spot. And those of us who don't, probably going to be in breadlines or starving to death. But hey, can't help anything about that. So, all right, well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. Hope everyone has a wonderful evening, and I'll talk to you guys next time. Adios.